please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. You're watching Halftime Report. Emami is one stock that's actually taking it on the chin today. There's been a conference call that was organized just a short while back, and some of the management commentary from there continues to spook investors. So Mangalam is here with the takeaways from that conference call. Mangalam.
That's right, Sumera. So nothing new in terms of the spooky quotient in what the management said in the earnings con call. But remember, two things really stand out. One, it is a weak performance in a quarter which had a favorable base. All the FMCG companies going in with high expectations. And secondly, the mood of the markets itself. So the three things that really stand out. The first one, the management said the headroom for margin expansion is limited. Remember, Emami works with gross margins of close to 70%. Raw material prices are increasing. They work with EBITDA margins of close to 35% as well, the highest in the industry. So of course, headroom is limited and the management has used its pricing levers. The second one, they said dependence on wholesale distribution stands at 42%. Earlier it was 48%. Now that has reduced. But the point is 42% still is higher than its peers. And that is the kind of weakness that we've seen in their main product, which is Kesh King, which is dependent 100% on wholesale distribution.
Mangalam, allow me to interrupt you. We have the numbers for TVS Motors with us. The top line has grown about 23-24%, 154 crores. On the bottom line, it's not looking too good actually, because our own poll had thrown up a number close to about 175 crores. And 154 crores would be a bit of a disappointment, and the stock is tanking. I mean, the way the stock has run up, I'd expect some bit of a knock coming through given the bit of disappointment. Good numbers were expected, but so far the profit numbers disappointing.
Yeah, I think on the top line, we are going with a number of around 3,685 crores. That's a tad bit better in comparison to our poll. The operating profit, I'll just wait by for Sonia to calculate that one. We are working with a margin of around 8% approximately. And I think it's coming at around 7.8% or very, very close to that particular number. And the absolute EBITDA number that we were working with was around 288 crores. I think it's come more or less in line. The absolute number has come more or less in line, but since there's the top line growth has been higher than what we were working with, I think so. That explains why, in fact, because we were working with a 20% top line growth. The number that was flashing for you on the screen was more than a 20% growth, and despite that, we are seeing that the operating profit is more or less in line. I think the number should be at around 7.8% or thereabouts. 287 crores. Our poll was a number of around 288 crores. Sonia is with us as well. Sonia, how do you read these numbers? A bit of a miss in terms of margins. The top line growth a tad bit higher than what we're working with.
Well, the numbers are good. There's no two ways about that. A 23% top line growth, a 31% EBITDA growth, and the margin too, it's coming at 7.8%. The expectation was 8%. So the numbers are in line with estimates. But remember, the stock has run up a lot, as Sumera was pointing out. I guess, just some money is being taken off the table there. But good numbers, revenues above estimates. Let's listen into what the management had to say.
Quarter grew by 14% over last year Q3. Scooters grew by 22%. Motorcycles grew by 27%. Mopeds, there was a small decline. Domestic two-wheeler sales during the quarter grew by 10.4% over last year Q3. Exports sales of two-wheelers during this quarter grew 38% over Q3 last year. Three-wheeler sales, we saw an excellent growth, almost 68% over last year Q3. Revenue, excluding excise duty, grew by 23.5%. Last year's revenue was 2,983 crores, and this year 3,685 crores. Profit before tax for the quarter is at 210 crores compared to 170 crores, 169.8 crores of Q3 last year. Growth of almost 24%. Profit after tax for this quarter is 154.35 crores compared to 132 crores. Growth of 16.3%. The tax rate year to date is at 27.6 compared to last year of 23.6. This is primarily due to the weighted reduction in the R&D expenditure from 200% to 150%. And completion of tax incentive in HP, Himachal plant. Operating EBITDA for this quarter is higher, is at 7.8% compared to 7.3% in Q3 of last year. On products, we have recently launched Apache RR310 into the super premium category, and we are extremely happy about the initial response from the market. We are ramping up to supply good volumes into the market. Jupiter portfolio is further strengthened with the launch of the Autumn Brown Jupiter Classic. Response is extremely good in the market. Again, Zest portfolio is also strengthened with the launch of Matte Purple. Victor portfolio we have strengthened with the launch of Matte series. Victor Premium Edition in early January 2018, which is recently. Apache RTR RR310 received the Bike of the Year award and Reader's Choice Bike Award by Autocar Awards 2018. We are expecting this quarter to do well. The monsoon has been satisfactory, and there is a stabilization post GST, and we are expecting the industry to do well, and we will do much better than the industry, and we will gain significant market share both in domestic market, international market, and three-wheelers. There is an upward bias in the material cost. We are focusing on reducing the impact of the cost increase through various cost reduction initiatives. We are constantly reviewing the position and taking appropriate countermeasures, and we will be also looking at price increases. We are planning to launch two models this quarter, one scooter and a motorcycles, and we are very confident about this Q4 doing much better than the industry. Thank you.
Just one question, sir. At present, your market share in the premium segment is an all-time high of 13.7%, thanks largely to the Apache. What is the outlook there considering this stat, and do you foresee higher revenue contribution in the premium segment leading to better margins?
We will continue to grow better than the industry. Apache has been a great brand, and it is doing much better than the industry. And definitely with the new product launches in that category, we are very confident that we will be able to maintain the momentum, gain significant market share in Apache category.
And what about margins, sir? Do you foresee growth in margins as well in the category?
We don't give margins for specifically for the category, but overall margins of the company will grow better in Q4.
And also moving forward, the company has targeted selling 10,000 units of the Apache, at launch. Given the fact that you've got a very good response to it, would you look at scaling up that guidance number?
I think 10,000 in the first year is a good number, but we have capacity. So we will be reviewing it regularly. Based on that, we can scale up. Capacity is not a constraint.
So your budget expectations?
I think government so far has been always supporting the auto industry. So we are confident that this budget, there will be initiatives which will support the growth of automobile industry in total.
Okay, that's the management of TVS Motor. A couple of key highlights. Numbers are good. The realizations for the company have gone up significantly to 44,600 rupees per unit, and that's because the super premium segment has been doing quite well for them. As the management pointed out, the new Apache is also expected to do pretty well. The response has been really good. So 44,600 rupees a unit is a 4.4% quarter-on-quarter jump in realizations. But despite that, the margins are still not going above that 8% level. That's because of higher raw material costs that the company has had to bear. So this time around, the management did mention that going ahead, they expect the margins to do better, which means that perhaps they could stick to that 8% mark. But I guess, because they are now gaining in the super premium sports bike segment with the new Apache, the new Victor, etc., the realizations could go up further. And I think that's the core business that's picking up.
Price hikes, he said.
Yes, they will be looking at price hikes. But it's important to note that raw material pressures are going up for everyone.
Yeah.
It's actually the core product portfolio for TVS which is doing well, which is something that we must focus on, and that's what's led to a good operational performance stripped of the higher raw material costs.
Okay, all right, Sonia, thanks so much for that. Well, let's get in Prakash Diwan. He's been tracking the stock very closely. Prakash, what do you make of the numbers? In line with what you were expecting?
So, it seems like if you look at only the profit number, there's some disappointment, but that's the opportunity. You have a company which has committed to the margin growth to be in double digits by the last quarter of the current financial year. So you still have 3 months to go for that. And
Prakash, let's reconnect with you. Actually, we've got you on a very, very scratchy line. We'll get back to you, Prakash. Ashwin Patil of LKP Securities as well joins in. Ashwin, how are you reading these numbers? Margins of around 7.8%, as Sonia was telling us. The realizations, that's been going up, and that's what's saving them the blushes from those raw material cost spikes that we are seeing. Your take on these numbers?
See, the product mix has actually improved in this quarter with the new launch of Apache, and the demand for it is quite buoyant. Secondly, if you see, maybe at the bottom line, due to the higher tax at Himachal Pradesh plant, their bottom line has got slightly below our expectations. But looking at the top line as well as the operating profit level, the company has performed quite in line with our expectations. Though the margins came at about 7.8%, the company has been saying since a long time that they'll be punching in double-digit margins in a year or so, but it's still elusive. Sometimes it happens because of weaker product mix. The other time it happens because of higher raw material cost. So in an end, we can say that unless and until the company comes up with a strong margin performance, coming out with a strong buy rating on it is really very difficult, because as it is, the stock has moved up quite a bit, and from these levels already the valuations are quite stretched. So we think that there is some correction due for the stock, and with the new products and all, we are just waiting for a double-digit margin. When will it happen? Because as it is, the marketing expenses, we know that for TVS is highest among the entire two-wheeler industry. It's close to about 6 to 7% of the total sales, when it is just about 2 to 3% for Hero and Bajaj. Okay. So with this comparison, we know that unless and until they get their game correct on the marketing expenditure front, as well as tight cost control with lower dependence on mopeds, which has actually already reduced in this quarter, but it was high in the previous 2 quarters. So unless and until these things happen, the company will be not, they will not be able to punch in 10% or a double-digit margin.
Ashwin, just stay on. We have Prakash Diwan with us as well. Prakash, Ashwin makes a valid point that despite the growth coming in from all quarters, somewhere or the other they falter as far as margin performance is concerned. This time around, it's higher raw material costs. Before this, it was not such a great product mix. But now, because they have such strong products in the super premium category, do you think that henceforth they can deliver as far as margins are concerned, or would that continue to be a spot of bother for you?
No, in fact, I believe if they were ever in a position to get that double-digit margin, milestone, they are probably closer to it than ever before. And I have 2 reasons for that. The first is that their strength was always in the Victor and the premium segment, the 250cc plus, which a lot of other companies have struggled to do well. And so either on one side of the spectrum, you have the CT100 and the Janta models from the Bajaj and Hero stable, and Eicher on the other side, on the 350 side. But this was a sweet spot which they had to increase and make a bigger niche, which they've done. And in the body language of the management is very clear that they are seeing that to be a very strong, the response to the new Apache variant is good. I think the raw material cost notwithstanding, Sonia, which is an impact across the board, yes, they will be able to do it. And what's happening is the export market growth, so this is what happened to Bajaj about 5 years back. The export market bailed them out of a struggling domestic presence. The same thing is happening to TVS. And the three-wheeler space, which is also a bipolar market, a 2-player market, it's going to get them to be a very cushioned kind of a play. So I think the fixed cost will get defrayed over a better product mix than ever before, and they will probably, if not 10, they'll probably touch 9 in the next 3 months, 9.5.
Prakash, do you think, of course the numbers are good, no two ways about that, but do you think this hope of a double-digit margin has already been priced into the stock? I mean, it's not cheap, right? It's a, what, 28 times
29 times FY19. Yeah, I agree.
Times is not cheap. So despite good numbers, do you get a sense that a lot of the good news is in the price?
No, so the skepticism at 400 levels, exactly 3 quarters back, has moved to a little bit of optimism at the 700 plus zone. I agree. But what people pay for is the ability of the company to maintain its market share at the current levels and grow from here on. And if rural India is going to grow post this budget and whatever expectations we are having, this is one company that has a significant presence in those fast-moving rural market segments like UP and AP and Tamil Nadu and all. So these are markets, and remember, Karnataka is going to the polls. We have a lot of other states, in the heartland of India, midland of India, which is looking at the elections. This is where spending happens, and TVS will definitely get its market share also to be improved. So I don't think you are overpaying for it. You might be paying probably for whatever good news is out, but buy a share for the good news that's yet to come, and I think that might still be in the offing.
Prakash, thanks a lot for that. Ashwin, just want to get you in final thoughts on, the realizations for the company have really seen a big bump up now. I mean, 44,000 rupees per unit is something we have not seen in a very, very long time. Would you not give a premium to the stock because of the core business picking up? And what's your expectation henceforth for margins?
Margins are definitely expected to move on from here on because we know that the product mix has improved, the realizations have gone up. But we don't know when they'll be coming up with a 10-digit, with a double-digit or a 10% margin, because it has been elusive. It has been elusive since a long time. But I also think that the BMW deal has happened, and the products are coming into the market with that deal in consideration, and there a major share of them coming in. But that has already been priced in, because since a long time this news was there in the market, and 700 close to 700 rupees for TVS with a valuation at about 29x, and at the same time when you are getting better companies like Hero and Bajaj who are having healthy profitability and margins, I would definitely go for a Hero, because the rural market growth which we were talking about some while ago, it will benefit more to Hero than to Bajaj or TVS.
Okay, all right.
So we are positive more on Hero than any other stock within the two-wheeler sector.
Okay, Ashwin, thanks a lot for that. So just to summarize, good numbers coming in from TVS Motor, 30% EBITDA growth, 23% revenue growth, and a good pickup as far as realizations are concerned.
All right, thanks so much for that, Sonia. Well, we have Subin Life Sciences. Those numbers are flashing for you on the screen. On the top line, there's a growth of around 40%. The EBITDA number as well has come in higher, so that's come in higher by around 38%. So margins more or less stable at around 31.14%, very, very approximately. And even the net profit looks quite good on a year-on-year basis. It's coming at around 34 crores. That compares with around 27 crores. Yes, Mera?
Yeah, their CRAMS business, which last time around was a bit of a downer, that has done well this time, which is their main business actually. So for CRAMS, they've done about 157 odd crores, which last quarter was just about 100 odd crores. So that has done well for them, and I think that's what's aided their top line this time around. Services remains flat actually on a quarter-on-quarter basis. In fact, if anything, there's been a bit of a deceleration on the EBIT in that business, but CRAMS has done well for them this time around. We'll try and touch base with the management shortly to see some of the other internals, but definitely a bounce back in their mainstay business.
That's right. I'm just looking at the R&D cost as well. That, in fact, is a factor that we look at very, very closely. So that as a percentage of of the total sales, that's fallen drastically actually. If I just take a look at the R&D cost, it's coming at around 13.9 crores. That compares with a year-on-year number of around 16.4 crores. So just keep that number out. In a sequential basis, it's up marginally. So when you have a growth on the top line of around 40% and you're seeing a degrowth in terms of R&D costs, that's what's helped them maintain their operating profit. In fact, that's why the operating profit has come in. And keep an eye out on Sundaram Fasteners. So there, those numbers look quite steady. The margins more or less stable. There's been a small contraction of around 600 basis points, 60 basis points approximately. But there's a top line growth. There's a net profit as well that's come in higher. So there's a growth on the top line. The margins more or less stable. Revenue growth of around 20%. The operating profit growth will be a tad bit lower than the revenue growth, because there is a small margin compression. In fact, the net profit as well has jumped up. So more or less stable numbers coming in from Sundaram Fasteners. Top line growth of 20%, EBITDA growth of around 15.5%. Margins, a small contraction there, but the net profit as well did jump up, and that number as well should be flashing for you on the screen. It's up close to around 22%. But let's focus on the other set of numbers that was just flashing for you on the screen. Subin Life Sciences, those numbers look quite good. Mr. Venkat Jasti, the chairman and CEO of the company, joins us. Hi, Mr. Jasti. The numbers, sir, looked quite good, particularly your CRAMS business. So there you have clocked revenues of around 150 crores in just one quarter. I remember you used to do around 100 to around 115 crores on a quarterly basis. Is there any special order that is included in this 150 crores?
There is no special order per se, but it's the mix and match of our projects that are maturing into opportunity. That's what's happening. So sometimes, like last time, it's only 110 crores or something like that. But keep changing. But at the end of the year, it will be positive.
Okay, Mr. Jasti, good afternoon, sir, and congratulations. What's the pipeline for CRAMS looking like now?
The pipeline is looking as good as usual, and we have about 114 projects, active projects on hand.
114. Okay. All right. So the other thing I wanted to focus on was your research and development costs as a percentage of sales. There was a time when it was around what, 11 to around 14%, very, very approximately. Now it's come in sub 10%. Can you maintain it at these levels?
Yes, sir. We are maintaining around 60 crores is the normal allocation for the preclinical R&D.
Okay, just hold on. Just hold on to that thought, sir. We have, Jain Irrigation that's come out with its set of numbers, and the net profit. There's a big bump up actually that we're seeing over there. It's coming at around 67 crores. That compares with just around 7 crores. Even if I compare it on a sequential basis, it compares with around 14 crores. So bottom line, that number is looking quite good. Even in terms, I think in terms of a top line over there, we are seeing a growth. It's coming at, I think we should get that number that's flashing. That should flash for you on the screen. We didn't have a poll as such, I think, of this one, but I think Naveen had sent us some estimates of Edelweiss. Over there, they were working with a growth of around 27%. So let's get that as well up for you on the screen. The revenue number, I don't know whether there's a, so it's coming at around 1,889 crores. 1,889 crores. So that's a growth of around 13%. So that's better than at least the estimate that we had. We had an estimate that expected a growth of around 27%. So that's a tad bit better. Even in terms of margins, I think we should get that number up for you. Edelweiss estimate, in fact, they throw up a number of close to around 13%. So that number should shortly be up for you on the screen. But the net profit number as well at around 67 crores is looking quite good. But that's because of another income. That's, there's another income component of around 38 crores. And that explains why, in fact, we are seeing such a big bump up. The Edelweiss estimate had expected around 44 crores. Yes, Mara.
Q3 is a seasonally the strongest quarter, actually, for Jain Irrigation. And Morgan Stanley had said that that's actually the near-term catalyst. So I guess with the numbers looking decent now, even though there's a big other income element that has come in, I want to also perhaps focus a little bit on how the segments have done, particularly high-tech, agro-process, etc. So perhaps if you have any of those details, I mean, that's something that we can also look at to see where... All
right. I think high-tech agri-input products, so there it's coming at around 982 crores approximately. So that's a bit of a growth. That's a good growth on a year-on-year basis, actually, because it compares with a number of around 660 crores. And on a sequential basis as well, it's roughly around 15 to around 18% growth, even on a sequential basis. In terms of an operating profit as well, yes, even the high-tech agri-input products business is not just a growth on the top line. There's even a growth in terms of the operating profit. The plastic division, though, over there... yes, there is a bit of a growth over there as well. Unfortunately, I think there's one of their divisions, that's the agro-processing division. Over there, in fact, there is a bit of a degrowth that we're seeing in terms of on a sequential basis. And I think the operating profit as well has, come in a tad bit lower. So we'll just keep an eye out on that front. The margin, there's a bit of a compression. I think this is primarily because of the agro-processing division. Over there, we're having 378 crores in terms of a top line. That compares with around 356 crores. But in terms of the EBIT, the segmental profit that they give, it's coming only at around 11.9 crores. And that compares with around 21.8 crores. So that's, I think, the key reason why there's a bit of a miss, Sumera.
Okay, we'll touch base with the management of Jain Irrigation in a bit. For now, let's focus back on Suven Life, where the numbers are looking good. Mr. Venkat Jasti, the chairman and CEO, is on the line with us. Sir, apologies for keeping you waiting, but result season is always a very, very busy time for all of us. Sir, any guidance that you want to leave us with on how FY18, the entire year, might look?
Yeah, I think the similar numbers will come in for the fourth quarter also. So overall, even though there is a degrowth in the specialty chemicals, we'll have about 8 to 9% growth on the total on the top line, about 10 to 15% growth on the bottom line.
10 to 15% growth. So you're talking about FY19?
FY18, sir.
FY18.
Ask me FY18.
All right. So you're saying that you should wind up this year with a revenue number of around 650 crores. Is that possible?
No.
600 crores?
Around 600 crores.
600 crores. All right. Great. Thanks so much, Mr. Jasti, for joining in and, in fact, giving us all those details. The stock is seeing some profit booking, I think, from the high point of the day. Yeah, I think we can wind up on the show.
Just a quick check on the market itself. So we're pretty stable as of now. The mid-cap index is down about 145 odd points. Nifty Bank is taking it on the chin today. And in terms of the result reactions, we had TVS Motor, where the numbers are looking decent actually. It's only on the bottom line where there's a bit of a miss, but the stock is sulking a tad, now down about 2 odd %. And amongst the other stocks which are not doing so well right now, I mean, look at something like a PVR. I think it reports numbers tomorrow.
Yeah.
So that stock too is down about 4.5 odd %. United Spirits, India Bulls Real, Motherson Sumi, all of these are stocks which are not doing so well right now.
And that's right, Sumera. Just trying to find some green. Balkrishna Industries, the stock was trading in the red when we started off the show. Now that stock moves to the high point of the day, so keep an eye out on that one. And Ashok Leyland as well, that's the other one that I'm looking at. That as well is giving you some green and otherwise quite a red day. But on that note, we'll wrap up on Halftime Report. You stay with us.